The broadcast is now starting. All attendees are in listen-only mode.
Good afternoon and welcome everybody to our CarMark Auto Finance webinar. Today's webinar will focus on residual-based financing for used and certified pre-owned vehicles, partnering with dealers and lenders to bring residual-based financing to the late model pre-owned vehicle business. For more details about the CarMark Auto Finance program, visit carmarkautofinance.com/demo or send us an email at info@carmarkautofinance.com. So welcome everybody to today's session. But before we get started, I want to just go over a few housekeeping items for the folks who are joining us today. Please make sure you've dialed in using the phone number provided in your communication email or are able to listen via your PC speakers. We are recording today's webinar and we'll make the recording and presentation from our speaker available to you in the coming days. So we'll hope you'll share that and others at your dealership. You'll be in listen-only mode for this webinar, but we still want to make it interactive. So please use the questions box on the GoToWebinar control panel to ask a question during any point in the presentation. And after the presentation, we'll have a question and answer session where we'll try to address as many of those questions as we can. If you have any trouble during today's session, just use the hand icon and alert a member of our team, and we'll try to get things rectified as quickly as possible. So without further ado, let's bring in today's presenter. He's Richard Epley, the Chief Executive Officer of Auto Financial Group. Good afternoon again, everybody, and welcome to the webinar. Richard, thank you for joining us.
Yeah, thanks, Nick. Appreciate the time and opportunity to visit with everybody today. First thing I'd like to do today is run through the agenda and what we plan to cover today. First thing I'm going to discuss today is market challenges. Then I'm going to talk about the CarMark Auto Finance program and how it works, why consumers love it, how it can mean more money for your dealership, some examples of some dealers that have had some success with our program, and then we're going to open it up for some Q&A. So let's start off with some marketplace challenges. And let's talk about today's consumer. Most consumers today want to put very little money down on the cars that they're purchasing. Most consumers are vying for longer-term contracts, 72, 84-month. I've seen high as 96-month loans out there today. We also are seeing a ton of negative equity out there. A lot of the consumers would like to trade more often than they are, but they're stuck with negative equity, thus having a hard time getting out of their cars. Even though people are vying for longer-term loans, we're still seeing that the average life of an auto loans is still around 34 months. Let's talk about current industry challenges. Although the customers are out there, looking for the best car prices, there's just a ton of competition among dealerships. It's very, very intense. Everybody is marketing the lowest price available out there. When it comes down to it, although people are advertising the lowest price available, the consumer is still opting for the lowest payment available. The number one challenge of dealerships really is differentiation. How are you setting yourself apart from your other dealers in your area? And we believe that our program does that by giving a program that can retain and attract new customers by being an innovative program. So let's talk about the CarMark Auto Finance program. The compelling offer with the CarMark Auto Finance program is that you can drive the vehicle of your dreams for up to 40% lower than a retail contract. It's not a lease, you own it. There's no security deposit or upfront fees required. And it's available, as you mentioned, Nick, on pre-owned, but it's also available on new cars as well. The next slide we're looking at here really is a tool that we use in training with new dealers that are coming on with the CarMark Auto Finance program. And this slide, there's really two easy questions that we start with this slide. Is how many miles do you drive per year? Our program offers 12, 15, and 18,000 miles per year, so that we're flexible there. How often would you like to trade? We're seeing that most customers, most consumers are still trading about every 3 years. And so in using this tool, we tell the consumer, why rather than opting for some of these longer term loans, why not get in a tool that you can pay for the part of the car that you use. So using this tool, showing a $30,000 car with a guaranteed future value in the CarMark Auto Finance program, the consumer is really paying for that $13,500 worth of depreciation plus interest, which is the way they're getting to that 40% lower payment. The next slide just really breaks down that $30,000 loan with a $16,500 guaranteed future value. You can see in the first column, using a 2.75% interest rate on a 36-month loan, the monthly payment would be $869. Using the $30,000 loan at an interest rate of 3.75% with the CarMark Auto Finance loan, with the same term of 36 months, you're looking at a payment of $464.80. So over a $400 a month lower payment using the CarMark Auto Finance program. So what options does a consumer have at the end of the loan? Guaranteed future value means that the consumer has options. So looking at that $16,500 guaranteed future value, if that vehicle is worth $17,500, so it's $1,000 more than the guaranteed future value, the customer can trade in their vehicle or they can keep it. If the $16,500 is this equivalent to what the car is worth and the guaranteed future value at the inception of the loan, and they can always keep the vehicle and use that as a tax credit. In the event that the car is only worth $14,500, then and the car's $2,000 upside down, the consumer can always turn the vehicle in and walk away. So using our program, they have pure flexibility and whatever they want to do at the end of the term by either keeping it, refinancing it, or turning the car back in and walking away from it. So depreciation really is the #1 risk to trade-in value. So what determines a vehicle's depreciation? So obviously the age of the vehicle, the miles of the trade, the condition of the trade, which in both cases are controllable, and then the market for the trade, which is really out of the consumer's hands. It's a risk that's out of their control. So market risks are things that the consumer cannot control, and that's something that the CarMark Auto Financial program does control for them. So let's talk about protection from market risk. What are some examples of some market risk? Obviously, as gas prices can go up, a new model comes out with highly desirable equipment. Bad press, such as what happened with the Toyota vehicles and the brake issues that they had a couple years ago, and then rebates that are always coming out and changing can affect the market value of cars. So with the CarMark Auto Financial. What the CarMark Auto Finance program does is eliminates this market risk to the consumer by giving them that guaranteed buyback option and allowing them to turn in their vehicle and walk away at the end. So let's talk about how the CarMark Auto Finance program is better than a lease. The consumer owns the vehicle; they're entitled to the vehicle, so they're not having to. They're not a lessee in the vehicle, and they've got some advantages there. They have flexible terms, 24 to 72 month terms. They can pick the right terms that are desirable to them. There's lower excess mileage penalties. Ours is 10 cents. Most leases that are out there are between 20 and 25 cents. Depending on the state, there's some tax advantages. In Texas, for example, the CarMark Auto Finance program works better because there's no the consumer pays all the taxes up front on their car. If they want to refinance it at the end, they're not subjected to double taxation. There's also no acquisition fees or security deposits. There's also no first payment or anything collected up front. Because it is a retail installment contract and the consumer's entitled to the vehicle, they also can have the lower liability insurance coverages. They don't have to carry the higher limits that you typically would have in a lease. So why is it better than a balloon? It is, if you're comparing this to a conventional balloon loan where the consumer pays, and using a 36-month example, in a conventional balloon they'd pay 35 monthly payments, and the 36th payment would be the balloon that they would either have to write a check for or figure out a way to refinance it. Under the CarMark Auto Finance program, it works very similar, but at that 36-month balloon, that's when the consumer can elect what they want to do with their vehicle, whether they want to keep it or whether they want to turn it into us and walk away from it. So it really combines the best of a lease and a balloon. So let's talk about why consumers love CarMark Auto Finance. Obviously, the lower monthly payments, as I mentioned, it can be as high as 40% lower than a retail installment contract. Some people look at it as a way to upgrade to a little nicer vehicle than they would otherwise be able to afford. There's very little cash investment, typically no down payment when entering into this type of contract. There's mileage options. As I mentioned, there's 12, 15, and 18,000 miles a year, so there's some flexibility with mileage options. And then having the excess mileage charge of only 10 cents is very consumer friendly. And now having these shorter and flexible loan terms is now an affordable option for the consumer, as your retail installment contracts at 36 to 48 months now with the price of cars is just not very affordable. So why it makes sense? Next slide I'm going to show you is an example. So this is comparing a retail loan and a CarMark Auto Finance loan, and the key thing to note here is that a 72-month conventional loan is more than the 36-month CarMark Auto Finance loan. You can see that the CarMark Auto Finance loan payment of $332 on 36-month is lower than the $336 a month retail payment. So from a dealer perspective, you can put one of your customers in a shorter loan term, so you can get your customers getting a new car more frequently. And most of our best dealerships use examples like this on their mirror hangers. It can help them drive sales. So let's talk about how this program can mean more money for your dealership. You can make more gross, drive showroom traffic by being able to advertise lower payments, and it can enable you to offer a competitive advantage or have a competitive advantage in your marketplace, and it can allow you to sell more cars. And one of the best things about it, it costs you nothing to get started in this program. There's no upfront fees to get started. You just have to find a lender that has the program in order to get on board. Next slide. These are just some examples of some. This slide and the next one are just some examples of some dealers that have been having a lot of success with our program. This first one here is an independent dealer in Dallas, Texas. They sell an average of 325 cars per month. They sold 246 cars using the CarMark Auto Finance program in 2013, providing for an average monthly increase of over 20 vehicles a month. and they've sold 66 CarMark Auto Finance loans solely in the month of January. The next slide is a franchise dealer in Houston, Texas that sells an average of over 500 cars per month. They sold 32 CarMark Auto Finance loans in the third and fourth quarter of 2013, and then they sold 45 solely in the month of January. So we're having a bunch of dealers having a lot of success with the program. It's providing a differentiating tool for them and being able to provide lower payments to their customers and providing a vehicle for them to get their customers in their dealerships quicker so they can sell them a new car. So I am going to now open it up to some Q&A and see if I can answer any questions that you have. And as Nick mentioned, this deck and I think the recordings can be sent out to you as well from today's webinar. Nick?
Thank you so much, Richard, for the great overview of the benefits of the CarMark program. A point you mentioned during the presentation was how there's no upfront fees, that it's just a matter of getting an association with a lender in that particular market. What recommendations or what types of lenders has the program been doing business with? Who might be a good prospect for a dealer to work with to get started in the program?
Yeah, so we have a variety of lenders that we work with. Both credit unions and banks, primarily in the credit union space. But we would ask a dealer that they're interested in our program to reach out for us, and we'll try to match them up with one of our lenders that we're currently doing business with.
Excellent, excellent. A lot of questions coming in, and we appreciate that. Please use the questions box in the GoToWebinar control panel. Some of the questions that have come in, Richard, is who guarantees that residual value, and what risk does the dealer share in that part of the program?
Our company guarantees the residual value, and we're guaranteeing it to our lender. And then there also is an insurance. We're backed by an insurance company as well, so we actually insure those residual values. So really, from a dealership perspective, there's no risk. Okay.
And you mentioned that the benefits to consumers. Is this more targeted to a prime credit applicant, or does it cover the whole credit spectrum? What would you say is the sweet spot of consumers who could potentially leverage the program?
The majority of our lenders are prime lenders. So I would say typically credit scores of 620 and up. But what I would tell you is that our program, when utilized best by dealerships, it'll drive showroom traffic. So whether their credit spectrum is prime or below prime, when having our tool and being able to advertise payments is still going to drive showroom traffic, which is going to turn into more car sales. And
we have participants coming from a variety of locations. Is the program available throughout the country?
It is. It is. I think we're transacting business, I want to say, in 40 states today.
Okay.
So obviously we have some areas that we've got more coverage than others. It really just depends on where that dealership is, and what we do when we get a request in is just try to source the appropriate lender for them.
Okay. A lot of good questions coming in from the registrants who have joined us today for the CarMark Auto Finance webinar. dealers questioning how does the lease turn in or at the end of term process happen if the customer decides to walk away from the vehicle? What's kind of the nuts and bolts of how that process unfolds?
We start the process 12 months prior to the maturity date of the loan, and there's a number of touch points that we make with the consumer, and we basically are finding out as much information as we can about the car, about what the consumer's intentions are with the vehicle, and then once they decide that they do in fact want to turn in the vehicle, then we schedule a 30-day preterm inspection that takes place either at their home or place of business, whatever's convenient for the consumer. We'll also we'll utilize our dealers as well if they want to be involved in that process. And then once that inspection process is done, then we pick up the vehicle once again, either at the consumer's home, place for business, or from the dealership if our dealer partner decides they want to participate in that process.
Okay, very good, very good. A specific question regarding one of the points you made in the presentation, the guaranteed value. Again, how is that calculation made, and if there is in fact a premium, how is that explained to the customer?
As far as the guaranteed future value, or I'm not sure if I understand your question. So we're using the ALG, which is the industry standard for setting residual values. So we're pretty much using ALG with our own modified adjustments if we choose to make any adjustments. Our lenders typically will charge a slightly higher rate on the CarMark Auto Finance program compared to a retail loan to offset an acquisition fee that we charge the lender, and it's disclosed to the consumer in the rate.
Okay, great. Another question about a specific state. Inquiry is coming from Wisconsin, which the questioner is saying that's a title holding state. How might the program work in that particular location?
Whether it's a title holding state or non-title holding state, we're doing business in both. So it's one of the things we'll do is in a title holding state is we coordinate with the consumer to get the title back prior to us picking up their vehicle. So that's something that's handled a little differently in the end-of-term process. But as far as the program goes, it's viable, and whether it be a title holding or non-title holding state. Very good.
Very good. You mentioned that the possibility that this could be leveraged for new vehicles, and in the pre-owned space, what are the parameters for how late model or what model year or mileage characteristics that the vehicle has to qualify for the program? What type of vehicles in the pre-owned space would fit the program?
Today we're going back to 2009 vehicles with up to 90,000 miles on them.
Okay. Well,
and then they will and then as far as the mileage goes going forward, obviously if they'll get whatever they select. So if they select 15,000 miles a year for 3 years, they'd get, the car could end up using that 90,000 mile example could end up with 135,000 miles on it.
Right. Excellent. Okay. Very good. And again, it's a matter of a dealership coordinating with a lender in their markets. What maybe are some examples of that's some new relationships that have been formed this year that have helped dealers get started, maybe with some new relationships or expanding some relationships with existing participants?
You know, I don't. I mean, you know, as far as our program expanding, we're signing up lenders. You know, every month we're getting a variety of lenders. They're opting into our program, and you know, same with dealers as well. So I don't know that there's a trend in certain areas of the country, but we're getting inquiries from all over the place. I mean, the bottom line is that you know, car prices are going up, you know, every year, and people's incomes aren't keeping up with car prices. So there's only two ways to solve for that. You can continue to expand loan terms to solve for the affordability issue that's out there today, or you can opt to have a program like ours, and we think that's the best solution for our lenders and for dealerships as well, and for the consumer.
Very good. Final moments here with Richard Epley and sharing the benefits of the CarMark Auto Finance program. Another dealer is inquiring about how vehicle service contracts can be incorporated into the program. Is that a possibility?
Absolutely. That's something that's something the dealer can sell, you know, along with our program.
Very good, very good. Well, on the screen there is Richard's contact information as well as the website where there's a demo that you can plug in the numbers that Richard shared during the presentation and put some of your own inventory into that demo plug-in and be able to get a sense of how the program could work at your store. So I guess to close it out here, Richard, just what steps would you like to leave with dealers who would like to join the program? Well, what should possibly be the first initial steps they should do to get started?
I think that the initial thing to do would be to reach out to us, and then, you know, we can try to put them in, and we'll look at the dealer or the lender in their market area that is best suited for their dealership, and can walk them through the process and how, you know, what they need to do in order to get set up.
Excellent, excellent. He's Richard Epley with Auto Financial Group. Thank you so much for the great presentation, Richard.
Thanks a lot. Appreciate it, Nick. Thanks, everybody.
And for the latest in pre-owned industry news, be sure to visit autoremarketing.com. If you're not already getting the information via email, just please go to our website at autoremarketing.com and get your free subscription to the industry's top e-newsletters to keep you in the know of everything that's going on in the pre-owned markets. That's autoremarketing.com. So again, for Richard Epley with Auto Financial Group, we thank you so very much for joining us today for the webinar showcasing the possibilities of CarMark Auto Finance. Again, the website, CarMarkAutofinance.com, and to send an email, it's info@CarMarkAutofinance.com. So for our webcast team, I'm Nick Zulovich. Thank you so much, and we'll join you next time.